Hello, very warm welcome. You're watching Your Trades on 80 now. This is Priyanka Uppal along with me, Snehi Shah. The markets whole week saw fresh records high and of course saw record levels on Sensex also 75,000 which hit the week itself. Small cap index was in fact which hit advanced for fourth week this week. There were many sectors which hit record levels this week. Was metals, auto, reality. Metal clearly hit the record high this week, advancing for the fourth week. We saw reality stocks surging on the business updates majorly. Stocks led by Godrej Property, Phoenix Mills. In fact, Bank Nifty also saw a remarkable mark, which is 49K. And now experts believe that they can be even, the index can test 50,000 marks going ahead. But then what seems to be the dragger was the heavy ones today clearly. Reliance, HDFC Bank, ICICI Bank, and of course the IT numbers, which exerted a lot of pressure on the index today, and of course the IT SPAC, which will kickstart the earnings season also. This space has to be clearly watched out for. But then clearly we closed below 22,600, which creates a which creates a question here that are we here to test the lower levels from here? But then what did you track, Snehi?
Well, absolutely, Priyanka. Lots to see when it comes to the markets that we've had this week. Despite it being a truncated week, we did see some. We did see a lot of action coming in. We did hit 2 record high levels during the course of the week, and today's market session has been volatile as well. But let's move on and talk about anything else that was in focus. Bharti Hexacom made its debut on the bourses on Friday. The stellar debut coming in over there as well. Strong debut coming in, and stock doing pretty well as well. Vodafone Idea was the next big news maker when it comes to the weekly news. Then on the back of that FPO that they've announced, the 18,000 crore FPO. That will be opening on the 18th of April. We did get the update of the details also as well. The floor price has been set at 10 rupees per share. What we also got recently is that the investment firm GQT Partners and State Bank of India Mutual Fund are also considering investing up to $800 million in the Indian telecom firm Idea's FPO as well. Promoter Aditya Birla Group is also going to be infusing 275 crores. So we'll be watching out for more updates on this FPO. And also when it opens on April 18th, we'll be keeping a close watch. Everything else that happened over the course of the week, we had some big brokerage notes coming in and big moves were seen on the stocks like Ventura Healthcare, Colgate. Jefferies has initiated a buy on Ventura Healthcare, target price at 15.10. 50% upside is what they're seeing. Even Motilal Oswal on Colgate Patil initiated a buy with a target price of 700. Now on Friday, we also did get Colgate Patil's quarterly updates, and while numbers were flat on a quarter basis, even on a year-on-year basis, numbers were quite flat. So we'll see what happens over the course of the week when it comes to that. But well, the biggest newsmaker is TCS as of now. That is going to be kickstarting the earnings as well. So we'll watch out for that front as well, Priyanka.
Yeah, the numbers are actually already out for TCS. So let me take it from there and talk to you about the numbers, because the profitability has come in better than expected at 12,430 crores. Even if the revenue is pretty much in line with expectations, I have the operating revenue number, which is coming at 61,200 crores, and that's bang in line with what we were expecting. In fact, a smidge below, if I have to call it that. But overall, the profitability figure tells you that perhaps on an operating basis, the performance has been better, and that's why the company has managed to beat the expectations on the profit front. Overall, the street was expecting that there's going to be 1.5% kind of growth on the company's top line. They have managed to largely deliver that number. The profitability, of course, has come in better than expectations. The expectations were fairly wide, right? From 11,900 crores all the way to around 12,000 crores is what the expectation was, and the number has actually come in between that, and that explains why the stock pretty much ended at the high point of the trading session. It was, earlier a bit somber, but by the end of the day, it managed to cross that mark of around 4,000 crores as well. In terms of the valuations, however, the stock is not very cheap, to be honest. We have seen that the prices had actually run up this year, and that's the reason the price equity multiple had actually moved on to 28 times. So overall, the number, at least the frontline number that I have right now, seems impressive on the bottom line, because other income hasn't actually gone up. The taxes have also been pretty much on a steady basis. So I'm not seeing any big reason why there would be a big beat, apart from the fact that the operational performance seems to be better. And that's the reason we have seen that uptick come by as the profitability is concerned. I think we're still waiting by for the numbers as far as margins are concerned, as well as what the constant currency growth is. But if it is any to go by as far as the first number is concerned, it looks it's an impressive set. We'll try and get more analysts to talk to us about how the numbers actually fare up versus the expectation because as I pointed out, overall expectations from the sector were fairly muted. The street is expecting that perhaps it's going to be a high single-digit kind of growth that the companies would deliver in the coming year. Nobody's talking about a double-digit growth. So whether it's going to be, say, 7 to 9% or 3 to 5%, those are the kind of questions that is asking. Initial signs have been a bit more positive. Yes, furloughs have come off, and the fact that BFSI has taken up, those are some of the factors which give heart to the factors that perhaps the worst is over for the IT companies. But for now, we are not seeing any, any commentary such to tell you whether that has happened or not. So the first numbers that we have on revenue, which is a smidge below, but I'll call it largely in line. Profitability has come better at around 12,500 crores. And of course, we'll wait back for more details in terms of the press details to come by to talk to us about how the numbers really look. But for now, it looks like a decent set, the first two set of numbers.
In fact, Nisha, what we saw was that there were expectations that there can be market expansion because there was no major wage hikes. In fact, there was a higher efficiency what Street was expecting. So let's wait for more numbers, for more details to come in. But then in the meantime, we do have experts. We have Rajesh Palviya, head of technical and derivative, to talk on. Okay, Anisha, we have Sandeep Agrawal.
Yes, so let's take it forward and bring Sandeep Agrawal on the phone to talk to us about the numbers. Sandeep, I think we just the initial numbers coming in, 12,300 odd crores on the bottom line, 61,200 on the top line. Don't have too much details to give to you at the moment, but with these first numbers, what will be your initial sense?
No, it is, I would like to still see little bit number on the dollar side. I don't think they have yet come. So, looks very difficult to comment. But, what was the revenue number you have told? It has come?
130, that's the first number that I have as far as the rupee revenue is concerned. Dollar revenue, I'm just trying to open, but why don't you begin with the rupee revenue first?
No, I have not yet the rupee revenue.
61,237. 61,237. Okay, let me just fill you in with a few more details since I have the number. The FY24 order book now stands at $42.7 billion. The Q4 TCV was a solid $13.2 billion. So that's a very strong number in. The operating margin is a tad bit lower, 24.6%, because we were working with a number of around 25%. That seems to have ebbed off a bit. Growth has been led by India, which was high by around 38%. UK stood out quite well. And take a look at the constant currency number. On a year-on-year basis, it seems like it's 2.2% because they haven't mentioned whether it's quarter year-on-year, but looks like the number which stands out is 2.2% on a year-on-year basis. And the revenue has come in at $7.36 billion, which means around $7,300 million. Would you say it's a beat?
I think revenue number in line, but the order book number is very substantially good. And even the margins, I am not negatively surprised because, they vary 20, 30 bits, and I don't think it is, varying more than 20, 30 bits versus the estimate. So I wouldn't read much in the margin numbers, but I would rather say that the order book number is the one to look. As have said in the earlier interview also, the day that this is the quarter when you should look at the guidance and the order book, because now things will open up for the current year. As last few quarters have been little challenging, but the outlook, as the companies mentioned earlier, also looks more interesting and exciting.
Yeah, just stand correct on the margin figure because the operating margin has come in at 26%. The earlier margin of 24.6% is perhaps the full year number that the company has given. So all in all, it's a beat on the top line, largely because the dollar revenue has been good. The margin are actually a big surprise, 26%. Nobody on the street was expecting a 26-digit number. Everybody was between 25 to 25.3%. And the TCV number of $13.2 billion is pretty much out of the park because people were expecting maybe $7 to $9 billion led by the Aviva. This is much stronger than that. And even if you look at the bottom line figure, it's managed to beat the expectations as well. In terms of the verticals, it seems like it's energy which has done well. And overall, in terms of the other details as well, which is coming in terms of the commentary, K. Krithivasan says that we ended the FY24 year on a strong note. The operating margin is strong and we are staying close to the customers and helping them execute to their core priorities. Even N. Ganpati is talking about similar lines coming in with the stellar growth that they have reported this quarter. Samir is quite excited about the long-term investment that they've made in workforce reskilling as well. But talking about the certain sectors, BFSI has managed to degrow yet again, Sandeep. BFSI is down 1%, while manufacturing again has stood out with a 7% gain. When do you see BFSI to bottom out?
So I think, BFSI will take some time, still one or more quarter before, it starts showing some growth, because you have to agree to the point that BFSI is directly related to the fear of recession. So, the discretionary spends are still on hold by many of the clients. But I think the way manufacturing is doing and the way order book has, they have reported the order book and the operating margin and the valuations are not very high. I think it is a very good set of number, and commentary honestly is very good. And also if you see this industry is about quarter on quarter billing, so from that perspective, at the level at which they have exited the quarter in terms of margins and in terms of order book, I think definitely numbers will be much better going ahead for in the coming quarters. And also remember that all the Nasdaq stocks have done extremely well, and we always get a benefit of orders from them with a lag effect. So I think future looks much brighter, and I think the worst of the pain is behind for the large cap names. That is the way I would like.
Much of the pain is out. Mayuresh Joshi is also joining us. Mayuresh, do you think this kind of numbers warrant for a re-rating on the stock? I mean, a stellar number coming in on the margin, quite a bit of beat in terms of the deal wins as well.
Oh, absolutely, Anisha. I think fabulous set of numbers, and therefore I think the revenue growth, though much better than expectations. I think what has really bad has been the margin performance. So I think nobody on the street was of the opinion that margins will be at 26 odd percent, and they've actually delivered that with a very, very strong Q4 TCV at $13.5 billion. I think the best part about the number also is that from a geographical perspective, UK 10% up, regional markets up 9.6%, and LATAM markets are also significantly higher on a year-on-year basis in dollar terms. US is the only market which is probably lagging. And as I said in the afternoon show that I did with you as well, I think it will take a couple of quarters as discretionary spending patterns come back on track. And as that happens, the second half of this year will be significantly better for BFSI as a whole. And that complements the kind of growth that you've probably seen in energy, kind of growth that you've probably seen in manufacturing, as well as life sciences and healthcare. So I think fabulous set of numbers. Yes, valuations are a bit on the higher side, but I think with these numbers, I think the stock should get re-rated. It is trading above key pivot levels as we see it at MSI. I think the stock will have a very, very strong show in Monday's trade, and it will take the IT sector with the expectations that the others might also deliver. If not a good set of numbers, at least a decent set as numbers coming through for Q4.
Okay, so the TCS wave will carry with it the rest of the IT peers as well. But that's the next question to you, Sandeep. Which is the next IT company that can perhaps surprise us on the upside with the kind of numbers that TCS has delivered now?
So, if you see last 30-year data, I will again and again reiterate the same thing, that in last 30 years, always we have done extremely well or bad on either side with a 6 months lag versus the, Nasdaq big techs. And this time also, if you see last year, despite all the fear of recession, hard landing and everything, most of the stock in Nasdaq, even the large names, are up from 60% to 300%. So there is no reason for us not to do well. So we will definitely do much better, and our large cap names honestly have only moved up to the extent the earnings have moved up. So there is a real re-rating of 5-10% which should be there, plus additionally earnings surplus. In case of mid cap, I think we are fairly priced on the multiple side. If there is a surprise, they could still do better. But I would say that there is a wave of technology which is again coming, like it happened in 2021. If you remember, in January, all the management were busy in the numbers and guidance, and in March, everyone has to come and increase the guidance. Same thing you will see this year, when in January, February, everyone was very dovish. Now you will start listening to very good commentary in month of April. I am very positively, I have very positive view that all these names will do extremely well going forward, and next 6 months you will see good action in the sector. Yes, one or two company may not show good numbers, but the commentary will be very good.
Very good. That's the take coming in quick. Taking it across to Omkar Tanskali, who's joining us on the show as well. Omkar, both other experts believe that the stock is likely to open strong, very strong perhaps on Monday, and there could be a further re-rating. Is that what you're planning to do for estimates?
Yeah, I mean, definitely it looks to be strong, and in terms of execution capabilities that TCS has always been showing off. That's why they are also demanding the premium in terms of valuations. I believe it's more of sorting out the clients and your engagement with the clients, and how do you ramping up the deals in the challenging times. So that decides your services part, and TCS is doing good. So I always been optimistic about the technology driven and TCS to be very specifically. And in terms of the demand scenario, I believe it's the deal pipeline has already been shown that is a still demand. Yes, definitely uncertainties, lagging the growth drivers on the on the laggard part. In gradually, it will definitely will likely to pop up. Still, it's being very it is very important to watch out for the vertical commentary and outlook.
Point taken. So that's the take coming in. With that, we'll let you guys go. Sandeep, Omkar, as well as Mayuresh, thanks so much for joining us. But if you're joining us late, TCS has kickstarted the earnings season on a very positive note. Yes, the revenue was pretty in line with expectation, but there's a big beat coming in on the margin front at 26% versus street expectation of 25.2%, resulting in a beat on the bottom line as well above the 12,000 crore mark. Beg your pardon. Attrition has cooled off further. 12.5% is what it's that versus 13% that it was last quarter. The other big surprise has come in terms of the deal wins, which stand at $13.2 billion. That compares with the street expectation of $7 to $9 billion. So strong showing coming in from TCS, and the experts saying that on Monday the stock is likely to open in the green. With that, we'll wrap up the special coverage of TCS's earnings. See you on the other side after this very short break.
Hi there, welcome back. You're watching Trades on ET now. Let's kickstart this special weekend edition then and talk to our experts that have joined us on the show today. Rajesh Palviya, Head Technical and Derivative Research at Access Securities, and Vinit Bolinjkar, Head of Research at Ventura Securities. Gentlemen, thanks so much for taking the time out and joining us on the show today. Rajesh, I'm going to come to you first. The earnings season, we're just at the beginning of it. Give us an outlook of what you are penciling in next week. We have important banking and financials as well as IT names coming out with their numbers next week. Give us a slight bit of a preview, a hint of what the street can expect.
Yeah, good afternoon. So, if we analyze the overall sector for the market, still Nifty and Nifty both are trading very well above to their near-term, short-term support area. Nifty almost closed near to 20,500. That's the immediate support area where we are seeing a base on the put concentration. So till Nifty is holding about 22,500, 22,400, trend is likely to remain on the bullish side, and buy on dip should be your strategy. On the high side, once again Nifty spot manages to cross about 22,650, 22,700, then this rally can extend further, and possible target we could see towards 22,800 to 22 or 23,000 level also for the Nifty. Overall structure is bullish. Yes, there was some profit taking in today's session, but still if you analyze the overall trend is likely to behave on the bullish side in the coming week. So for Bank Nifty also trading near its important support area of 48,500. If we analyze the call put concentration also, so major put is placed at around 48,000, 48,500. So we are almost trading around those level. So if we able to hold this 48,500 in the coming week, then again yes, some pullback action we can see in Bank Nifty again towards 48,800 to 49,200. Once we take out 49,200, then this rally can extend, and possible target for Bank Nifty we could see again towards 50,000 also. So overall structure for both the indices are still in the bullish side. Buy on should be your strategy. Sectoral rotation is taking place. Some of the sector where we are focusing at this moment, that is metal, chemical space, as well as real estate space. These three spaces are looking promising for coming week.
So these three spaces looks promising, and let's not forget now TCS numbers also surprise us. So IT, which had happened with the drag right now, can probably surprise us on Monday. But then, since you mentioned so much about banks and financials, let's rope in Vinit Bolinjkar also to understand that what to expect from banking stocks here. Vinit, the deposit growth, what we have seen for private banks has been strong. In fact, the advances growth for PSU Bank has also been in a comfortable range. Now, should we expect stellar numbers from banks and finance also? What are you making?
No, I expect very strong banking numbers to come, especially from the PSU banks. Secondly, we might see some kind of NIM contraction, but that will be more made up by the high street growth that we are witnessing amongst all the banks. And the other factor would be, with the economy kicking off, NPS could also be at suppressed levels. So the profitability would also improve. So we're looking at slight NIM compression, high volume growth, and NIM staying in control, leading to stupendous numbers. Top pick among the PSU banks is SBI, Canara Bank, and Bank of Maharashtra. And among the PSU banks, we like IDFC Bank and Axis Bank as a dark horse.
Right, well, those are your preferred picks coming in from the banking sector. Thanks so much for sharing that with us. Rajesh, let's talk about a sector that has not done well at all when you look at it from a weekly basis, and that is pharma. Now, that is a defensive sector, and well, when we're seeing volatility in the markets, this sector is not holding on very well. What should the strategy be for investors when it comes to playing the entire pharma pack? Is there any stock that you are liking in this pack? Are you seeing any upside at all when it comes to this sector?
Yeah, so definitely there was profit taking in some of the pharma space. Sun Pharma was the trigger in the current week. But again, if you analyze the healthcare space is looking very promising. Metropolis, Lal Path, these two stocks are looking very promising. The kind of breakout which we are observing on the daily as well as the weekly time frame. So I think these two space can do well. Metropolis and Dr. Lal Path, one can look to buy this stock as structure for near term to short term is looking promising, and we believe both these stocks can continue furthermore upside. Even from the pharma space, I think one can look to buy Ipca Lab. So that stock is also holding the ground at higher level, and looking at the overall structure, we believe that till stock is holding about 1290, 1280 kind of your strategy should be to buy and accumulate this decline. And on the high side, we expect Ipca Lab can its upward momentum towards 1400 to 1420 coming weeks.
So these are two of the picks which you mentioned from the pharma space. Now, but then let's talk about individual sectors which have shown record levels, and probably experts believe this is just the start of the rally. I'm talking about metal space. Vinit, we've seen manufacturing sectors growing across various industries. The data that we picked in from China PMI number, in fact, the GDP number from other economies, base metal prices or LME, the kind of move we've seen. How should one approach these stocks, considering that quite a move has already kicked in?
So we need to take two things into consideration. One is the speedy reshoring happening not only in the United States but across Europe. In fact, Europe is spending about 400 billion, while the US is on 2 trillion kind of a build out. So all this, along with India as well as China, being the major markets which are all spending on infrastructure, you're going to see a rapid boom in the demand for metals. And what has been happening is, the investment in metals has not kept pace with the demand. And typically for any mining capacity to come on stream, it takes 10 to 15 years. So what we are going to see is a very long kind of commodity rally with commodities moving far higher. And to contribute to this is going to be the dollar debacle, which we are going to witness over this decade, leading to substantial movement of investments from financial products to hard metals. So metals are very strong investments. We like Hinduco. Vedanta is one of our top picks. Hindustan Zinc, and also Lloyd Metals, which has got a very, very strong, capacity build out.
All right, well, that's on the metals pack. Let's shift focus, talk about IT, right? Because TCS numbers have been, right off the bat, they've been brilliant. Now, coming up next week, we also have Wipro numbers coming out. Rajesh, share with us what you are penciling in when it comes to this IT major and the overall earnings outlook for next week as well.
So most of the large cap IT stocks are, consolidating in very narrow price range. If we first analyze the TCS, the kind of covering which we have seen in the April series till that almost shedding of 9% open interest and price rise by around 3%. This is the consecutive week where TCS has formed a higher high formation. So that clearly was showing that some sustained buying is taking place. So we believe that TCS can exhibit a good amount of rally in the coming trading session. Possible target we could see towards 41 20 to 41.40 on the higher side. Your stop loss should be placed at around 3,970. So this could be a strategy for TCS. But if we analyze the Wipro is almost now near to its 100-day moving average support area, which is placed at around 470 level. So if at all the stock manages to hold 470, 468 kind of zone, then some pullback action we can see. As we have seen, the commentary, the TCS number. I think some positivity would be there in the TCS stock prices. Some effect would be there in the Wipro also. In the same kind of behavior we can see in most of the large cap IT space. So all the stocks are trading near to their important support area. 470 is the immediate level where one keep eye on the Monday trading session for Wipro. If it's able to hold this level, then some upward momentum towards 485 to 500 we could see in Wipro also. So if you buy Wipro around current level, so your stop loss should be at around 458. Even Infosys is also trying to hold out the last 3 week support area that is placed at around 1470. So for Infosys also, that 1470 needs to watch on Monday. If it's not breaks below those level, some pullback we can see in Infosys also towards 1520, 1530.
Okay. So Rajesh, when you started the show, in your opening comments only you mentioned, since the data which we saw at the start of the April series only, the banks have been very strong rollover figures from banking. And in fact, now that we're talking about, you only spoke about market maybe testing levels like 50,000 going ahead. So which would be the banking stock which will contribute? We've seen the rally started from private banks. Has it extended, or maybe can it extend to banks also now?
Yeah, so Priyanka, yeah, definitely PSU Bank may start, contributing to this upward momentum. Though private, from the private space, ICICI Bank and IndusInd Bank, these two banks are looking promising on the technical ground, and we believe that these two banks can contribute to this upward momentum. So ICICI is our preferred choice from the private space, and we expect target towards 1160 to 1170 for the short-term trading perspective. Stop loss should be at around 1075. From PSU space, yes, one can look to buy SBI. So that stock is also moving upward since last couple of weeks. Stock is making higher high-low formation. Stock is moving in the upswing channel on a weekly chart. So that clearly shows that there is a sustained buying taking place. Stock is comfortably holding about to 20-day moving average. So I think SBI can also start exhibiting good amount of rally from here onward, as stock is holding the ground 750 level. That's the immediate support area. So we believe that once stock crosses over 775, then possible target for SBI on the higher side can be seen towards 800 to 820.
All right, well, I'm going to shift focus and let's talk about, Vinit, let's talk about a sector, the second biggest gainer of the week, and that is real estate. Now, we've been seeing some continuous rally coming in when it comes to this entire real estate space. So I have two questions for you when it comes to this sector. The first one is it too late for an investor to start investing in this sector? Has it seen enough of a run? Or are there more legs to this rally? And the second question is, if you were to play this real estate space right now, what would your strategy be here? Because we've seen Q4 numbers coming in from all across the board when it comes to the real estate space. Would you prefer larger developers like DLF, Prestige? They've been doing very well. Or do you think now is the time for the smaller names like Kolte Patil and Signature Global, Century Textiles, all of these to shine, because their Q4 numbers have also been stellar? So how do you play this back, if at all now is a good time to enter? Vinit, I believe you're on mute. Vinit, I believe you'll have to unmute yourself, please.
Relicare, so real estate as a pack, I think has got substantial room for growth still remaining, given the fact that the affluence in the system is increasing at a very rapid. There is need for nuclear family housing, and we are going to see the smaller towns, the tier 2 and tier 3 grow very faster than the cosmopolitan cities. So given that kind of scenario, we prefer the Kolte of the world, which will do very well. The second rung of they should do very well. And among the large cap, I think one stock which is just finished some of its corporate tie-ups in place is going to be the stock of India Bulls Real Estate. So if you want to play the cosmopolitan real estate story, I think India Bulls Real Estate is a very cheap stock with a large land bank owned almost 15 years ago. So they're sitting on virtually extremely low cost land bank, and they would definitely getting very large margins on projects that they roll out in cosmopolitan areas.
All right. Okay. So two of the picks coming in, two of the recommendations coming in from this space also. Rajesh, quickly tell us if you have gathered some more inputs from mid cap and small cap, which can be the surprising stocks for coming week. The kind of performance we've seen from some of the stocks, of course, side like stocks like Exide, brokerage notes, and Coal Department we've already discussed. But many of the names from mid cap and small cap, it surprised this week. And let's not forget, small cap is again up this week also, and it's been in the fourth week in advances.
I think one stock that we are focusing from mid-cap space, that is Man Infra, is also looking very promising. The way stock is now holding the ground above 200 level, the kind of buying interest which we have seen in last couple of sessions, that clearly shows that Man Infra can do well in coming week, and possible target on the higher side we could see towards 230 to 235. One can buy this stock with stop loss of 208. Another stock that we like at this moment is CDSL. That stock is also looking promising on the and the way stock has managed to breakout on the weekly chart. So here also we can see good amount of rate in the coming week. Possible target on CDSL we could see towards 2070, 2080. So one can buy CDSL with stop loss of 1960. So these two mid cap stocks are looking promising for coming week.
Rajesh, and I believe you still have some more picks for our viewers. So tell us what has made it to your radar and what should we and the viewers be watching out for next week's trading session then?
Three stock idea which I have identified for the coming week. First one is from the healthcare space, that is Lal Path Lab. We have seen very good amount of rally in both the healthcare stocks, the part of derivative Metropolis and Lal Path Lab. The way stock managed to give break of last 7-8 days consolidation, we expect this rally can extend. The way stock has shown long built up setup. We are projecting target for Lal Path Lab towards 24, 20, 24, 30. One can buy this stock with stop loss of 2330. The second stock that we like is from chemical space, that is Aarti Industry. Stock managed to give breakout of its previous swing high of February, and the way stock has shown long built up throughout the week, we expect Aarti Industry can extend its up move. Though sector delta is also there, so 790 is the immediate target where we are projecting for the stock, and one can buy with stop loss of 740. The third stock is from the metal space, that is Vedanta. We have recommended this stock previous week also, but the kind of buying interest which we are seeing in the stock in last couple of trading session, and the stock managed to give breakout on monthly as well as on the weekly chart. We expect that Vedanta can continue furthermore outperformance, and possible target we could see to 388 to 390. So Vedanta is buy with stop loss of 367.
So a few more picks coming in, Rajesh. Well, on this note, we'll let you both go off. Rajesh and Vinit, thanks very much for sparing your time today. Thanks very much for sharing these recommendations on view also. But then let's get you further. And premiumization, an important trend that is shaping up when it comes to consumption. We caught up with Mihir Vora, CIO, Trust Mutual Fund. Let's listen to what he had to say about the roadmap for premiumization across the sectors.
All premium services and goods will grow rates much faster than what we think they will.
What is premium consumption? What is the ticket value according to you?
It's the segment, I would say, not the ticket value. Say travel and leisure, hotels, high-end cars, higher-end bikes. You can say a lot of high-end electronics. Okay. All that consumption basket, high-end
luxury
premium real estate, exactly, premium real estate. All those segments will grow at a rate much faster, and the logic is simple. First of all, the pyramid is shrinking at the bottom and growing at the demographic pyramid, income pyramid is growing at the top much faster.
Urbanization has started.
Urbanization, higher income levels. But the numbers, if you just put in perspective, can be very stark. And when we talk about 10-20 year runway, you need to keep those numbers in mind. Between 2005 and 2018, or 2006 and 2018, the number of households with income of more than 30 lakhs grew by 8 times.
Okay.
Okay, it was about 10 lakh households, it became 80 lakh households.
8x.
8x, right? That number from 80 lakhs is going to go to 3 crores by 2030. Upper middle class will grow by 3 times.
Okay.
Very similar. So 4x increase in the highest level income level segment, 3 times increase in the upper middle class, and the bottom shrinking. So this will lead to a long runway of premium consumption.
All right, that's the long run in the premium consumption, what Mihir Vora highlighted. But then Manish Sonthalia, Chief Investment Officer from MK Investment, we also spoke to him today, and he's penciling in of the current market situation. He also adds that power, infra, capital goods might see a earnings-led growth recovery. Let's listen to him, what exactly he said.
Markets in general, on the benchmark is not very expensive. It's a given. I mean, 750 on the Nifty in 2025 on Nifty 50, not very expensive at 19.5, 20 times. Now come to the themes, I would believe that it's all about the investment going forward. It's all about the order book. You're not going to see the earnings come through just yet. It's going to be back-ended, and that is when near-term valuations do look slightly expensive. Some of them are trading at FMCG valuations, so pick and choose within that space. But I think it is all about your power sector, it is all about infra, it is about capital goods, it is about your, somewhat positive on pharma per se. But I think on a broad brush basis, banks per se are going to see earnings-led growth. So see, these are some of the themes which are going to be in the limelight. And within that, you got to pick within the broader markets as well as the large space.
All right, well, that's the word coming in from Manish Sonthalia. But with that, I'm afraid we're completely timed out on this special weekly edition of Your Trades. When we see you next week, we'll take you through all the action. Next Wednesday is going to be a holiday. Indian markets are going to be shut on account of Ram Navami. 19th April is when the first phase of the Lok Sabha 2024 election kicks off. So, well, lots of important cues to watch out for when it comes to next as well. But we'll take you through special coverage of all of that only on ET Now. Stay tuned.